please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, for the markets, nothing much to incrementally update as of now, but there are specific stocks which stand out. So HCC should come up for you. That stock is down another 5 to 6 odd %. In fact, it's at the low point of the day. If we pull it up, it's lost around 30 odd % on a month-to-date basis. It's down 40% plus on a year-to-date basis. There is this looming concern with regards to Lavasa and a possible bankruptcy. So that stock seems to be weighed down today as well. Watch out for that one. The other one which seems to be showing some amount of traction on the downside is even something like an IDBI Bank, which is down around 4 to 5 odd % at this point. Huge volumes which are traded on that one. And even PTC not doing too well in trade today from the power space. So PTC is down around 3.5 odd %. Huge volumes coming in on PTC as well. But I think we can get in some opinion now. Let's get in some corporate opinion. In fact, Pawan Goenka of Mahindra & Mahindra is optimistic on FY19. Women's focus on the rural economy, which is in fact positive for the company. Let's listen in to what Mr. Goenka had to say.
Overall, I don't expect a significant risk to profitability unless we have some major negative surprise. We are going into the year with almost no headwinds. The agriculture output has been good, the MSP prices have been good, the government's focus on agri and rural development is absolutely very high. And normally, and as you said, that the very first indication of monsoon also is positive. GST is all settled in. So I really don't see any reason why we should have a negative growth during this year. A lot of the selling of electric vehicles will happen on tender basis, ESL tender, and on tender basis, as you know, that there is severe competition. So I think that we are over the situation of having to have a variable cost loss. And as we move forward, I would expect to start seeing a little bit, very small margin coming into a variable cost level. And as volumes go up, and then we would see overall profitability. But I would say that at an overall profitability level, it will take a couple, 3 years before we can start seeing sort of positive based on the volume growth that we are going to see. In the last 2 years, SUVs have significantly outperformed the passenger car segment, and today constitute 28–29% of the total passenger vehicle volume comes from SUVs, which perhaps is amongst the highest in the world. For Mahindra, we have, like you said, two major launches coming up, and also G4 Exton from SsangYong coming in as a high-end SUV, and therefore we have 3 launches that will happen of new products during this year.
All right, that's Mahindra & Mahindra. 20 points lower on the Nifty. We're at about 9,979. Futures have still got about a 20–21 odd point premium. Ashwini Gujral is with us. Ashwini, thanks very much. Good morning. Your sense, you were saying the market should be sold into the gap up. That was, I mean, right after opening. Your sense now?
Still, you need to sell into the gap, particularly on the Bank Nifty, where after many days you are getting some sort of upside. See, we are unable to hold on to 10,000. That for me is the basic which needs to be crossed in order to, change a view even to sideways. So this is, probably first half sort of choppiness, and given where the market breadth, etc. is, you need basically 2 large banks to fall, and this entire market will come off. So my sense is still get short. Keep a stop above 10,000. That's fairly close by, and in case it gets hit, it gets hit. But overall, still a strong downtrend persists. Today, a different set of stocks are taking the market lower, which are metals, IT. So that's where you need to look for short ideas. As far as individual stocks are concerned, IDBI Bank is a sell with a stop of 70, target of 63. PC Jeweler continues to decline. That's a sell with a stop of 330, target of 314. And the odd, consumption stroke AC type stocks are doing well. So Voltas is a buy with a stop of 608, target of 630.
Okay, all right. You have a buy coming in on Voltas. Ashwini, before we get to the queries, just wanted to ask you if you're tracking the technicals of Brent crude, and if you are, what does it tell you, and what might the correlation be for our markets currently?
You know, the funny thing is that when markets are feeling bad, you know, they tend to correlate with everything that is negative. So my sense is Brent crude is headed higher. We've heard even in the morning, you know, 78, 80 seems to be that zone. And if that is the case, I think given where our yields, etc. are, the financials will take a further hit. So that way, I think that's one more straw on the camel's back, particularly with oil marketing and aviation, etc.
Okay. All right. Well, a couple of Twitter queries for you now, Ashwini. First up is Santaji that has 500 shares of Leel Electricals at 285. Wants to know the way forward.
See, it's an underperformer even in this consumer discretionary type of space. If I were him, you know, I would much rather look at Whirlpool or Johnson Control. This one is, you know, underperforming, still below its 200-day moving average. Even a Voltas is better. Often, you know, when you are in a market correction, improving the quality of your stocks help, because the better quality stocks tend to fall a little less.
Okay, we've got some questions now for you. I think
we have one more question left.
Ajay has 140 shares of Motilal Oswal. I thought Ashwini has a few more trades. Motilal Oswal, he's paid 1,350 rupees a share, and he'd like to know whether he should hold on to this position or sell. Ashwini.
Well, he should hold on, possibly even add, because you know, wealth management, etc. is just starting out in this country. These stocks have given back 25–30%. So good time to add. I think at some point in the future he'll get 1,500 plus on Motilal.
So there is no real incremental move up or down. We're at about 9,983. You heard Ashwini earlier with his calls for the market trades, etc. Let's get a fundamental perspective. Devang Mehta, Head of Equity Advisory at Centrum Wealth Management, is now with us. Devang, good morning. Good to have you here. I mean, you know, calls from institutional brokers or, you know, big individual investors recently all are converging to, you know, lower levels. I mean, we had a couple of calls calling for, you know, 95, 96, 100 kind of levels on the Nifty. Your sense briefly first to begin with.
Good morning, Prashant. Thanks for having me on the show. I think at this space, which the market is showing a bit of sort of uncertainty, the levels are not going to be sacrosanct. So, of course, 10,000, which was sort of a psychological barrier for a lot of participants in the market, and breaking 10,000 is sort of a sentimental bad move that is seen in the Nifty at this point. But I think there are n number of positives which have come out of the last 15–20 days, right from GDP growth to inflation coming down to industrial production moving up to robust car sales numbers for the last 2–3 months. I think market is sort of ignoring all these positive factors, as there are a lot of concerns regarding the trade war or what's happening across on the interest rate front globally. So yes, sentiment can probably spoil the party a bit. There can be a 4–5% correction still, which is lingering across in the markets. But to me, the smarter thing would be sort of right now not trying to time the market. People were waiting for that correction, and that correction has come. So it's time to sort of nibble into this correction.
Okay. What are the stocks or maybe sectors that you're incrementally buying at current levels post this correction?
I think, again, currently what we are advising our clients are rather than being adventurous across sectors which have a lot of global weightage or which depends upon the global conditions being conducive. There can be a lot of domestic factors, or there can be a lot of domestic driven factors which look good. Simply, for example, I think the auto sectors, right from the passenger car vehicles to two-wheeler sales to commercial vehicles to even tractors, all this that has seen a robust pickup in sales. The numbers of these companies also were incrementally good. For example, if I can talk about a Maruti or a Ashok Leyland or a Scots or an M&M, the numbers also showed a bit of great trajectory in the last couple of quarters. The operating margins have been improving. So I think this is one sector which currently is exhibiting a lot of strength. Of course, the price points have corrected in some of those, but these are all, I can say, wonderful businesses to own. Apart from this, the financialization wave, there can be sort of alpha ideas in spaces like life insurance, which has got listed in the last 1.5 year, and there is a lot of financialization, or I can say penetration, which is going to happen. The density of insurance would also improve. So there can be some ideas thick and fast in between this, which could be sort of wealth creators in the coming 2-3 years.
You want to name specific names, Devang? I mean, 2 or 3 top ideas really for absolute gains from here.
I think 2-3 ideas which immediately come to the mind. Something like a UPL, which currently just trades around its 52-week low, and then it's a wonderful agri play, not only dependent on India but also the food inflation theme, which rides across the globe, having its presence across even Brazil. I think this is one very interesting play which comes out. Something like even a Havels, which if I can put it into the fast-moving electrical goods category, the pricing power that the company commands, the brands that are already incorporated, and the Lloyd acquisition would also play out very well in the coming few days in terms of consumer appliances as well. So I think these 2 ideas which have also sharply corrected, notwithstanding the market correction, I think this should find a place in the portfolio for a couple of years horizon.
You mentioned Havels, but what about something like a Voltas Blue Star?
I didn't get the question.
Any more consumer durables on your list, such as Voltas, Blue Star?
I think yes, these are good stocks. Of course, Voltas, Whirlpool would probably also see the white goods being sold across the consumption patterns across India, and that too in a year which is going to be spurred by a lot of spending in the rural area as well. A lot of such sales come from the aspiring rural class as well as the semi-urban class.
Right.
These are also, yes, certain ideas which probably have not corrected big time, but should find its way in the portfolios.
I've got some of your other views here. You like airport and infra stocks? Airport and infra separately, or airport and infra together?
Clearly,
yeah.
No, so of course, I think the larger theme has to be road/airport/ports/infrastructure capital goods. I think these are sectors which probably would come back to the fore, and every new market rally has sort of new themes which emerge out. And I think in the next 2-3 years, whichever government remains in power, these are sectors which can't be ignored. Job creation would also sort of be enthused by giving boost to such sectors. So infrastructure, of course, as always, classically is done the project management consultant.
Right, Devang, you're talking about GVK GMR, is it? You like GVK GMR?
We have with us Madhu S. Nair, the CMD of Cochin Shipyard, joining in to discuss the company's outlook. Mr. Nair, hi, thank you very much for taking the time out today. If you could start, sir, by telling us firstly where exactly the business momentum is looking the strongest for the company right now, shipbuilding or ship repair?
The business momentum is looking strongest in the ship repair area, and ship repair, both the defense and the non-defense, both are doing well.
Okay, but could you elaborate a little bit, give us some more color on the repair business, sir?
See, ship repair, we do about 80 to 100 vessels a year in our Cochin shipyard operations, and the revenues are almost last year we had done about 550 crores of turnover out of a total gross turnover of 2,058 crore. That's FY17. And FY18, and that was a record turnover for ship repair, 550 crores. This year we are well poised to do better than that. So ship repair is doing well, and it's aided quite a bit by the defense orders in ship repair, which we have been able to get it. So we are happy the way defense ship repair is going. The other part of ship repair is also doing well.
Mr. Nair, you mean FY18 will be better, and then, or you meant FY19 should be way better than this year?
Correct, FY18. And the fact is actually, see, when we did 550 crore, the year before that was about 376 crore. So from 376, the jump to 550 was aided by a very major project, which was an aircraft carrier, which we did in FY17. So in FY18, we are talking without an aircraft carrier, and then still I'm quite optimistic that we'll do much better than last year. So all in all, the ship repair segment is doing very well, even despite a big ticket order like the aircraft carrier.
And what about FY19? I mean, what are things looking like? Because now 18 is almost wrapped up. You have a sense, and you're giving us a sense that it'll be better. What about 19? What's the visibility?
19 also, like I think we are also being a little bit fortunate here, I should say, because 19 there could be a big ticket ship repair order that's coming our way. So I think that jump could also be quite good in 19.
Okay. Could you tell us which order that is, sir?
I'm not in a position to disclose that, but then I can say it's a fairly, see, you know, anything more than 100 crore order in ship repair is big order, because when you're doing about 500, 550 crore a year, more than 100 crore is big order. So I can say this would be a much more than 100 crore order.
Okay, much more than 100 crore order. That's important news coming in. But we'll discuss the order when it comes then. But how are repairing margins, way higher as compared to any other segment? Is that correct? And if so, how?
That is right. That is right. I need to qualify that. See, the margins come in when you actually deliver a ship repair project on time and as planned. The moment you slip on either of this, then your margins fall. So due to a set of reasons, we have been able to have a good ecosystem here where we are able to deliver our projects generally on time and as planned. And that's when you get the margins. So under that circumstances, yes, the margins are definitely good.
I mean, so in the defense side and defense side repair work in that segment, is it all tendering based? Do you get any preference? Could you talk about that? How does it work?
Defense, all the defense tenders, defense projects being outsourced are through tenders. There are certain projects which belong to like the defense, the Navy offloads due to some operational requirements to yards which are just next door, let's say. So something in the East Coast could go to an HSL, something on the West Coast could, closer to Cochin could come to us, something like that. But predominantly all the ship repair orders by the defense, be it Coast Guard or be it the Navy, are by tenders.
What is the order book in the repair business right now? Again, I mean, I'm asking about visibility.
See, the order book in the ship repair business is around 400 crores. But that order book, see, you don't build up an order book in ship repair, because ship repair, you build up an order book for it to be executed immediately, let's say in the next 6 to 9 months or so. So what we normally talk about an order book in ship repair is what we accumulated, which is around 400 crores. But on the go, we actually pick up orders, and there's a fair bit of confidence that on the go you actually pick up orders.
Okay. You have around a 40% share in the repair business, correct?
I would see there are no absolute authentic figures, but our assessment is our market would be 40, could be even a little bit more than that.
Okay. In the shipbuilding business, can you share an outlook for the next fiscal, FY19?
See, FY19, FY18, let me explain first of all, like FY18 compared to last year, we have been giving a guidance of around 12% year on year is what we normally give for the company as a whole. And I can safely say that we would do a notch higher than that as we're going into FY18. Getting into FY19, again, we feel over the next few years, let me put it that way, and year-on-year growth of 12 to 14% would be what would be a conservative figure I could actually guide. And right now on the shipbuilding side, what we are doing, in addition to the large aircraft carrier project, we are handling 5 vessels. 4 of them are passenger vessels for the Andaman Nicobar administration, and 1 vessel is a special project for the government of India.
Could you tell us a little bit about the around 4,000 odd crore order from the central government? Where is that at? Have you started work on it, etc.?
That was actually an order which we have bagged. It's the ASW corvette, the anti-submarine warfare corvette order. That is for 8 vessels, which would be worth about 5,400 crores. It has not yet been converted into a contract. The formalities are going on. Another few months down the line, that would be converted into a contract. So that was something big which we secured last fiscal, and that keeps it interesting over the next few years, because those vessels, the first vessel after the contract, the first vessel is to come out in 42 months' time. So it will keep the yard busy, say, 42 months henceforth.
Okay, and what's the status about the joint venture at the Calcutta port, Mr. Nair?
See, what we are doing in Calcutta, there are 2 things which we are doing in Calcutta, because I think we have not come very clear on this. And let me try to explain. Like Calcutta, there are 2 aspects. One is a joint venture, which we have done with a company called the Hooghly Dock and Port Engineers Limited, which is practically defunct today. So what we have done is we have taken a 74% stake, and HDP has taken 26% stake in a company called the Hooghly Cochin Shipyard Limited, HCSL. And HCSL is all about inland waterways and vessels for the inland waterways. So what HCSL will now take over the assets of the erstwhile Hooghly Dock and Port Engineers Limited. They got 2 old units on the banks of the river Hooghly. And those assets, about 27 acres in total is the land. Those assets are being taken over, and we are investing about 130 to 150 crores approximately to build up a modern, new, small shipyard in Calcutta. And that's for building vessels for the inland waterways. There is something else that's happening in Calcutta, and this is directly Cochin Shipyard Limited has actually signed an MOU with the Calcutta Port Trust. This is for taking over the Netaji Subhash Bose docks. Calcutta Port Trust has got 2 dock systems, the Kidarpur dock system and the Netaji Subhash dock system. We are actually moving forward, and we signed an MOU last week to take over the operations in Netaji Subhash Bose dock for a long tenure and set up professional ship repair services in Calcutta. So there are 2 things. HCSL is all about shipbuilding, focused on the inland waterways, which is a JV company. Calcutta Port Trust engagement is CSL directly, and this is ship repair.
Okay. All right, Mr. Nair, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Cochin Shipyard talking about an outlook in FY19. Seems to be quite steady. But for the markets, just turning towards the markets, in fact, we've scaled back to 10,000 for the Nifty. So there is that buy on dips, which seems to be emerging as a little bit of a trend today. Let's see whether that sustains. But nonetheless, the Bank Nifty is up around 0.5% at this point in time as well. So high point of the day for that particular index.